Hello and welcome to ATFX's US CPI data preview. Well, it's going to be a huge week for financial markets, and one of the key factors for US markets and global markets will be this key inflation data print that we get later in the week. Now, we have to take into consideration some of the other data that's coming out this week. We do have non-farms and employment data and retail sales on Tuesday, and then we've got the CPI data coming up later in the week. Now, the interesting thing about the CPI data, the moves that we saw on Friday, some of it's been attributed to Fed members that have come out and they've told the world that they're still very concerned with the inflation level. And what we're expecting to come out later in the week is that those inflation levels are going to remain elevated. And that is why it's so important that we're looking at this CPI data later in the week. So before we move forward, what we're going to do today, we're going to have a quick look at the expectations for the CPI. There's going to be some trading opportunities. We're going to look at yen. We're going to look at euro. We're going to look at gold. So expectations for the headline numbers. The month-on-month number expected to come in plus 0.3%, so still moving up, with the year-on-year number expected to show a 3.2% increase. Also sticky and much higher than the Fed's preferred 2%. Inflation target. The core number, which some say is probably the more accurate number that the market and the Fed will be looking at, year on year 3.2% again, but the month on month 0.2%. So just a slight difference there. Of course, we're going to see trading opportunities if they come out deviating from that by any significant amount. And of course, with CPI numbers on that month on month, it's a 0.1, 0.2% variance, and same for the year on year. So bear with me. We're going to go over to some of the charts that we've got and see where there's some great trading opportunities potentially coming in the market. So here we have the dollar yen daily chart. Now, obviously, we've seen lots of volatility in dollar yen over the last few weeks. One thing with the dollar yen trade, of course, we have to take into consideration is we have got the Bank of Japan coming out later in the week as well, and they are expected to hike rates. So that should keep yen supported in general, but this dollar number will give us a good move. Now, of course, if we got what some will be hopeful, which is the double bubble. So if we get a lower inflation print and that comes in line with a hike from the Bank of Japan, plus a more hawkish Bank of Japan, that could open the way for big downside moves. So I suppose we're looking for something 0.1 or 0.2 lower than those 3.2 year on year. That should see dollar down to challenge these lows. Of course, we're a few sessions away, so we might see a break. These lows coming in around 115.20. The previous low last week, 154.93. A break here opens the way up for these lows here. And then from a technical perspective, all the way down to 152. So that's probably one of the bigger hopes for some of the bigger longer term trend players out there. We get that interest rate differential opportunity in dollar yen, lower dollar, higher yen, and it opens the way for a break forward. Now, obviously, we don't always know we're going to get that. If we get a higher print, this would really pull back on expectations for further rate cuts or pace of rate cuts in 2026. And we probably will see a very sharp challenge up to this trendline resistance level coming in around 156.75. And these previous highs just underneath 157. The figure, of course, a break here opens up the way for moves back up towards to challenge that 158 level. So good trading opportunities likely to come up in the dollar yen. Don't forget, we've got non-farms before we have this CPI. But that could be, it's probably the favorite for many old school traders looking for a longer term interest rate differential trade. It could be the lower dollar yen. So let's move over, have a quick look at euro. So here's the euro daily chart. And as you can see from here, we've seen some good breaks higher. Of course, the breaks higher for euro came because we got that 25 basis point cut from the Fed last week. The market took it in a more dovish manner than many thought they might do. Good moves to the top side. This move here was a decent break to the top side. We topped out around 117.62, but as you can see, we're only 30 points away from that. So from that CPI number, a lower number could see a break higher for the euro to continue this move back up. First stop really is going to be up to this near 119 level. So potentially good break trades there. Obviously, a stronger number would see the euro fall back into range. Support now coming in and kind of closely at that moving average now coming in around 116.20, 116. The figure pretty much does it on that trend line. So that could be a really good technical level by the time we come around to the CPI numbers. So good trading opportunities for euro. We've already seen a good one in dollar yen. good ones in euro as well. And let's have a look at gold, which is, of course, a favorite for many in our market. It has been moving really well. Potential for big moves as well on this CPI data later in the week. So here's the gold chart. This is the daily chart we've been looking at for ages. Obviously, we knew about this kind of 25-point appreciation from way back in September. I've left last week's trendline resistance in there. It was a good trading opportunity in itself. It broke out of this range that we'd seen for most of December. A nice little move to the top side. That was a 1.3% day, a little bit more actually. It broke through nicely. It came back, retested that line. That's why I've left that trend line in there. And then we had a really big move up there, high of 43.53. We're back around 43, the figure, but continued dollar selling as well as continued safe haven demand could see us challenge those all-time highs back up here, and certainly that 4,400 level would be in target for those gold bulls out there. Now, of course, looking at this CPI number, yes, if we get a stronger month on month, we're going to see dollar buying. It should take us back into the range. Support will initially be where this former resistance line was, around about 42.50, and then around about 42, the figure is that stronger trend line support. Of course, a weaker number that really pulls in those expectations of rate cuts from the Fed into 2026 should release gold to move higher. Dollar selling coming in across the board. First test will be these highs at 43.50-ish, but then we're kind of going all the way back here to those all-time October highs. There you go, 43.81, and that 43.74 was the day after. So a challenge up to those levels, could see it break and could see 4,500 targeted very closely. So there you go. CPI data is big this week. Non-farms is also big, and we've got some other central banks. So keep an eye on the two currency charts that we've looked at. We have the ECB making a rate call. They're expected to hold, and the Bank of Japan, they're expected. So they will have an effect on those. But CPI numbers will be key, and it's been key because we're hearing from Fed members. So good luck with your trading. As always, please subscribe to our channel. We'll keep you up to date with everything that's going on through and into the Christmas trading period, and of course, cracking on into 2026.